The Bank of Korea once again held its key interest rate steady at 3.5% as economic recovery remains its top priority despite concerns over inflation and oil price hikes due to Israel-Hamas conflict. Our Shin Ha-young has the details.
The Bank of Korea again held the country's key interest rate steady at 3.5%. The decision was announced on Thursday following a Monetary Policy Committee meeting.
Uncertainty over inflation and economic growth increased due to prolonged monetary tightening in major countries and rising geopolitical risks. It is expected that the easing of the inflation rate will be more gradual than initially expected. Considering such factors, we have decided to keep a tightened monetary policy. The Board of Governors voted unanimously to maintain the current tightened stance.
This is the sixth consecutive time that the BOK has decided to keep their rate unchanged. The base rate has been held at 3.5% since February, following 10 consecutive rate hikes aimed at taming inflation beginning in August 2021. Analysts say uncertainty about the economic recovery was the main factor behind the decision, as aggressive rate hikes could further dampen economic growth. While there are signs of a rebound in exports, a downturn in consumer spending is raising uncertainty about the country's economic recovery. Exports in the third quarter decreased by 9.8% on-year, the lowest decline since the fourth quarter of last year when exports began to decline on a quarterly basis. Also, Statistics Korea say consumption in August fell from the month before, the second consecutive on-month decline. Now, according to some experts, the chance of further rate increases is low. International credit rating agency Fitch Ratings on Tuesday said that it believes the BOK is at the end of its cycle of hikes. However, inflationary pressure, soaring household debt, and the exchange rate market are factors hindering the BOK from cutting rates. Earlier this month, the South Korean won depreciated to an 11-month low against the US dollar. The BOK on Thursday said upside risks to inflation have increased due to the effects of higher global oil prices amid conflict in the Middle East. Meanwhile, on the back of the BOK's latest decision, the rate gap between South Korea and the US still stands at 2 percentage points. Shin Ha-young, Arirang News.